Welcome. So this is a second video where we're going to look at question 4 in the exam, if you like, which is our second practical question. The model that I'm going to use is question 7 from the work booklet for Smith's Construction Co. Within this question, you've got to do the disposal of a non-current asset. So we're following our 5 steps for disposal, and I'd highly recommend you go over those 5 steps before you attempt this question, or you've got a firm understanding of those. So the first one is obviously to record the depreciation up to the date of disposal. Second, close the cost of the asset off to the disposal account. Third, close the accumulated depreciation, including the depreciation for the current year, off to the disposal account. The fourth step then is to record the consideration on disposal, and then finally calculate the gain or loss on disposal. So that's the 5-step process that we're going to apply to do this question. The syllabus also says that this question must be straight line depreciation, use straight line method. So obviously we need to know that straight line formula, which is the cost less the residual divided by the effective life. And we know with straight line depreciation it's the same amount each year, but we will have proportionate depreciation. So the disposal date's not going to be the 30th of June, it's going to be a part year. So for example, in this question, it's the 31st of March. So understanding our timelines with the financial year. So if it's the 31st of March, it's going to be 9 months, being the 6 months from the 1st of July to the 30th of June, plus the 3 months of the current year. So that's January, February and March. So it gives us 9 months, so 9/12 of the annual depreciation. So the first step for disposal is to calculate the depreciation for the current year. And normally we do a journal entry to debit depreciation and credit the accumulated depreciation to record that depreciation up to the 31st of March. We don't need to do that in the exam, but we do need to calculate what that depreciation amount is. So we'll prepare the asset details table first. So we've got the asset, in this case it's equipment. The cost of the asset is given to us, which was $40,000. Then we've got the residual, which is $2,000, the effective life of 8 years, and the annual depreciation we'll need to calculate. So all of that information I've just grabbed from the table that's been given to me in the exam, and you'll have those same details there. So working out the depreciation and using my depreciation formula. Let's get rid of that rounding again. Which will be the cost of the asset, which is the $40,000. Take away the residual of $2,000 divided by the effective life of 8 years. And that will give me the annual depreciation of $4,750. So each year this equipment depreciates by $4,750. Then I know for the current year, I've got to work out the proportion of that. So if the depreciation is 4,750, I need to multiply that by 3/4, or if you like, 9 months of the year, which is 9/12. So that will give me $3,562. Obviously, with depreciation, we always round it to whole dollars because it's just an estimate. So use a whole dollar number, which is 3,563. So that's the depreciation for the current financial year, if you like. So up until the date of disposal, which is also going to be important when I come to do my statement of profit and loss, which is the third or the second part of this question. So, all right, so the date of disposal is the 31st of March, 2022. The first step was to calculate the depreciation up to the date of disposal, which I've done. Then we're going to close the asset at its cost off to the disposal account. So we're doing the disposal ledger here, aren't we? It's not disposal of computer, it's disposal of equipment. We're doing the disposal ledger here. The cost of the asset was $40,000. So I'm going to close that off to the disposal account. So that's $40,000 in the asset account. So I'm going to credit the asset account by $40,000, and the asset account in this case is the equipment. So I'm crediting the equipment by $40,000, and I'm debiting my disposal account, which is the account I'm recording for $40,000. That will then give me a balance of $40,000, and that's obviously a debit balance. Just shrink it down slightly. So there we go. So that's the second step, to close the cost of the asset to the disposal account. Now I'm going to close the accumulated depreciation off to the disposal account. So obviously it's coming from the accumulated depreciation account. That's a credit balance, isn't it? Because it's a contra asset. So we're going to be debiting the accumulated depreciation account, and we're crediting my disposal account. And the amount that we have here is, we've got the $8,000, which was given to me in the table as the opening balance, plus the $3,563, which is the depreciation in the current year. So that gives me $11,563. So that's a credit, so that's going to be taken away from my $40,000. But I've still got a debit balance, don't I? Just going to get rid of decimals. Don't need them for this question. And it's putting a decimal in there for the depreciation, which I should get rid of. So we've got the equipment in the accumulated depreciation. So step 1 was depreciation up to date. Step 2, close off the cost of the asset. Step 3, close off the accumulated depreciation. So step 4 then is to record the consideration. So we're selling this equipment to IA1 Constructions for $15,000 cash, including GST. So it's cash at bank, because they're paying us cash for it. It's $15,000 including GST. So it would be 15,000 divided by 1.1 is what we're allocating to the asset, because we have to collect GST when we sell an asset, which gives me $13,636. Now it's got cents in there, so this is going to throw everything out. Just do it like that. So what's the balance of my account then? So I've got a 28,000. This is a credit balance, so we're going to take that away from the current debit balance. So I've got 28,437 debit. I'm crediting it by 13,636. So my balance is 14,800 debit. So this is a temporary account, the disposal account. So I need to close it off, close it off to the gain or loss on disposal, which is obviously the final step. I've got a debit balance in my disposal account, so that means I need to credit it to make it 0, which means I've got a loss on disposal, because I'm debiting the loss on disposal. And I'm debiting that loss on disposal for the 14,864. So my balance now is 0. Which is correct. So there's my disposal ledger, all recorded. So it's a bit awful because of the rounding. Fix that up. There we have it. So then we've got to do my statement of profit and loss. I've got a loss on disposal, and I've got the depreciation for the current year. So I need to record those two. So they're both expenses. Put in my expenses heading, put in the loss on disposal, and that will be the $14,864, and put in the depreciation, which is 3,563. Just the depreciation for this year. Just sort out the formatting there. And so make it the same. So then my total expenses will be the sum of those two, which is $18,363. So that's the final step. That's all I have to do in this question. So enter in the asset details to start with to calculate the annual depreciation, calculate my proportional depreciation, so how much depreciation is for the current period, then post the disposal account using steps 2 to 5 of my disposal, so closing the asset off at cost, the accumulated depreciation, which is the sum of the provided accumulated depreciation in the table, plus the depreciation for this period or this year, closing the consideration, net of GST, off to the disposal, and then finally recording my loss or gain on disposal. So then that completes the ledger. Then I do my statement of profit and loss, which is where I list all the revenues and expenses. I think question 5 had a gain on disposal. So here's an example of a gain. So there was Lexi's trading with a gain, and we just separated the gain out and then had the loss. And then this is the net of those, so the gain less the loss. But most questions that we've done have just been losses on disposal. So if it's a loss on disposal, it's a loss on disposal plus the depreciation, which gives me the 18,363. Remembering the statement of profit and loss is all my revenues less my expenses to give me my profit and loss. And that sums it up. So go away and have a go at question 7 yourself, or re-watch the video as you like, and make sure that you've got question 6 and 7 down pat in revision. Good luck.